you have to have the cost. You have to know what you paid for it. So the warning sign here, the biggest warning sign is keep track, document your cost of what you're buying. In this video, we want to look at the new filing requirements for the 1099-K. The title of this program is the 1099 Changes, and because it's technical, I'm going to be using some of my PowerPoints in order to follow along and give you some insight and much better visuals. But before we jump into this, just a couple of days ago, the IRS, as many may know, released a delay in this $600 no transaction activity. So if I see that and it's being delayed, then why should I watch this video? Well, first thing is that if you have a profit on a personal transaction, you're still supposed to report it. So that's one thing. So let's say I'm in college and I buy a couch for 20 bucks and I get to the end of the year and I want to sell it. I sell it to my buddy. He doesn't realize it, but I'm going to make some money. I'm going to sell it to him for 30. That transaction is reportable on your tax return. And people go, and as I've been teaching this before this delay in the implementation, and we'll get to the delay in just a minute, people say, well, that's no big deal. Well, in part of this presentation, we're going to find out that the IRS believes that this activity is reaching over $1 trillion just on platforms like, well, let me just do this right quick. This will help. On platforms like this, you know, we look at Grubhub, Uber Eats, but I think the big ones is eBay. You sell something on eBay, you sell something and somebody pays you on Venmo. The point of those transactions, if you sell something, even if it's a personal item, and you make a profit on it, you're supposed to report it. Because of the non-compliance and not reporting these transactions, that's why Congress reduced the threshold to $600 and no transactions. So one, independent of the 1099-K, if we as taxpayers have a profit on items, we are to report it on our tax return. Secondly, there is reporting for multi-states. You know, like Missouri is $1,200. I think Massachusetts has $600 and 0 transactions. So there are states that already have requirements in place for this year. I don't know for sure what they're going to do. So some of these platforms may just issue 1099s anyway. The $600 and 0 transactions. We don't know what they're going to do. See, we're at Thanksgiving, and they may already have it set up to send this stuff out. It's just the IRS is not going to be checking on it unless it's over, unless there is a 1099 reported. What happens if you get one in error? I hear a lot of people that are concerned about that. Well, in this video, I'm going to tell you how to take care of an error on your tax return. So I've got to report it if I have a profit, even if it's a personal item. If I get a 1099 in error, what do I do if one of these platforms just goes on ahead and issues to everybody? I want to be ready because this, and who does it impact? It could impact somebody that also has a W-2, and like during the pandemic, they started selling stuff out of a bedroom, or they sold old clothes, or they bought something and they didn't like it, or you know, just all the activity that's going on in the local communities. And again, they were doing things on applications like eBay, Venmo, etc. So let's take a real quick step through this. I'm not spend a lot of time on foundation, but the ultimate goal I want to get you to is if you have that transaction, whether you got a 1099-K or not, and you have a profit on it, and you're not in business, I'm going to show you where it goes on the return. So let's go forward on this. Stay with me just a little bit. I'm going to do a quick overview. I'm going to explain the law real quick, and then the 1099-K roadmap. That's where I'm going to show you if it's an error, here's where it goes on the return. If it's a sale of a personal item, here's where it goes on the return. If it's a hobby, like during the pandemic, people started, you know, selling stuff. They started selling, I'm going to call them widgets, but, you know, they created a hat and they created a basket and they started doing that. So what's this about? It's the fact that a 1099-K is in effect a decentralized distribution of money. And what I mean by that, if you go through the bank system, these are platforms outside the bank world. If I go through the bank and, for example, there's 1099 miscellaneous, NECs, don't worry about that. Credit cards, they report 1099-Ks already. But the important thing, though, is here is personal transactions, right here, personal transactions, such as sending money to friends and family, is not circle that, is not to be reported. But what's going to happen on this, on some of these, there's going to be errors made, and it could be coding of when the transaction happened. It could be the company that, the platform. I'm not going into that detail. I'm just saying what happens if, one, we have a profit on a personal item, and two, what happens if we get a 1099K in error, or there's transactions on it that are in error. Just transfer, again, transfer of money between two people is not to be reported. But the concern is some of these 1099Ks will still report those transactions. So this happened. Congress did this. If you don't like it, Congress did this. I'm not defending the IRS, but Congress did this. And the reason why, look at this, greater than $1 trillion to be transacted on a person-to-person app. What's a person-to-person app? Venmo. What's person-to-person? eBay. Okay, Facebook Marketplace. So it's where we do transactions. What happened was they delayed it in 23. Now they're going to delay it in 24, and it's going to go to $5,000. I'll give that part away. All right, here's what we're looking at. So you say, well, what all is this? This is just examples. And the ones that we want to look at is mainly in this area. This is not all of them, but look at these. These are platform marketplace, and these are person-to-person, which you can be, on both. But if those two areas I've circled there in red, they really hit home with what I'm talking about. Transaction of money on these. So I'm going to repeat it one more time. If you sell items, and even if you sell it for cash, you go to a swap meet, or we have auctions around here, all those are generally done in cash and they're personal. So I see people, they have a certain kind of china that they like, they buy it at these auctions, they resell it online. Well, every time they sell that, they wouldn't be coming back to that auction if they're not making money. So what that tells me, if I see somebody in auction and I see them the second and third time, and they're buying the same type of a Coke memorabilia or a certain glassware, that tells me they're either doing it personally, they're in a hobby, or they're in a business. With this new reporting requirement, it says, well, you should report it. But before this reporting requirement, and here's why I'm hitting before the reporting requirement, that person should have been reporting every single transaction that they made a profit on. So if they're buying a piece of glassware for $3 and they're selling it online for $4, and that's the only transaction, they should be reporting that on their 1040. That's why I'm going to back up right here. That's why this $1 trillion is so big. See, what's happening is they're saying this is unreported income of this magnitude. So if people aren't going to report it, then they're going to come out with this 1099K. So what we've learned up to now is that independent of the 1099K, you should still be reporting these transactions. And why I'm really hitting that is not so much of the past, but let's think about the future. This is being delayed. 5,000 is being delayed again a year, and then we're going to go into 5,000, and eventually we're going to get to the 600. What this is saying to you and I, we got to keep track of our cost. See, I've got some antique Coke houses. I can't sell them because I bought some of them 30 years ago. I don't know what I paid for them, and I don't want to sell them and take the exposure. So I don't know. I'll probably either give them away or give them to my kids or grandkids. But I think that's the most important thing, is even though today you got to report any transaction that had a profit, but also remember that as we go down the road, that threshold is going to go 20,000, 5,000, and then 600 over the next couple of years. And with that trend downward, now is the time you're buying stuff that you may be selling online. And it could be very small items. So I'm really trying to say, what's your focus? Where are you selling the stuff at? And the takeaway here is when you sell it, you got to determine if you have a profit. But in order to determine that, you have to have the cost. You have to know what you paid for it. So the warning sign here, the biggest warning sign is keep track, document your cost of what you're buying. And it could be household furniture, it could be clothing, Cynthia, she buys stuff at Goodwill. She was down visiting her daughter this weekend, and it's Black Friday. Where'd they go? They went to Goodwill, and there's another place. So, for example, I imagine she gets back, I'll have some dress shirts that are $5, $6 and a new tag on them. Well, in that case, if I decide to sell one of those shirts at $10, I got a profit. So here's the foundation. Let's move on. As we move on up, a little update on these person-to-person apps, which means not through the bank, it's person-to-person app. That's those, what we just saw, like PayPal, etc. 64% of Americans use P2P. 81% of 18 to 29 use person-to-person platform. They're transferring money between platforms. They're also selling stuff on these platforms. Now it's projected Zelle, Venmo, and Cash Apps will have 225 million users. You can see what's happening. We're moving from checks to apps, but we're also moving from cash to apps because I have a little story. A person told me this summer that their daughter is part of a Girl Scout and they sell cookies. And she said, anymore, you go to sell it. People go, I don't have money. You go sell it, I don't have money. So what she did is she gave her daughter her Venmo. And so what's happening is she's like, Mom, what about my friends? So she was a troop leader, so they used her app to collect the money for all the Girl Scout cookies. Well, in that case, now before they extended, I should say delayed the reporting threshold, she would have had this huge problem. But what I did tell her, when we get over to how to report a transaction, she's going to go ahead and report it and get started doing it right now. So we talked about how to report it. She's going to report it because she knows in a year, well, next year, when it goes to 5,000, she was over 5,000 of Girl Scout cookies sold on her app. So the point of it is, she would get that when it goes to $5,000. So, but the one thing I'm going to circle here is Zelle. There's an asterisk there, and that's the reason why it will not be issuing 1099Ks, whereas Venmo and Cash Apps will if it's for transactions, not for transfer of money, but for transactions. But Zelle is transfers between, it's an electronic transfer, or it's a platform between banks. So it's still in the banking system. So Zelle is reported through what we call it's like an ACH transfer within bank accounts. So it's within the banking system. So it does not have to report out at this point in time. It does not have to report out 1099Ks. Let's look real quick at the law, because again, I'm speaking to all people that are in business, people that have never been in business. All you do is you've worked your whole life, you get a W-2, but you're using one of these apps. When each transaction on this app, you got to look to see if it's personal. And that's going to be where most of the people I'm talking is going to get this. It's just I sold something personal and I went over the threshold. Or I started collecting items and reselling it. When I go to these auctions, I run into so many people that are buying and reselling on an app. Well, the thing I push with them again is you need to be documenting your price now. Now, if they're buying it and putting it back out, then that's pretty good. It could be a hobby, business, or investment. But I want to stay focused today. I want to stay focused on the individual, and I'm not going to pay attention to the business side because the business side already gets 1099Ks. They already know the system. I want to focus on the person that is like, well, I sell stuff online all the time. Well, first we know if it's a profit, we've got to report it. But I want to stay focused on personal or hobby. So let's go ahead and let's take a minute and let's move on to the personal side. Remember though, and what I like about this slide, there is no changes on what counts as income and how it is calculated. You must report all your income on your tax return unless it's excluded from income. There's no dollar threshold. It means independent. Just because you don't get a 1099K doesn't mean you don't report the income. Because again, that's the reason for the 1099K is because of the amount of non-compliance of transactions being reported through these apps. 20 years ago, the IRS was chasing cash. Today, they're chasing the app. That's probably the best way to put it. This is our final step. Let's look at the roadmap. Now, as I said just a moment ago, if you have a transaction, it could be personal. That's where I sell my couch, that $20 couch for $30. That's a reportable transaction, independent of whether I get a 1099K or not. If it's a hobby, it was during the pandemic and I started selling baskets or selling something that I created. At that point in time, it's just kind of hobby. It's not my trade or business. But then at some point in time, it may grow to trade or business. So the one thing I want to look at here, or a couple, is transfers. Let's start talking about the future and preparing for as this threshold moves from $20,000 to $5,000 to finally it appears to be the $600. At that point in time, transfers should not be taxable. So you might have enough transfers to go over the 20,000, and when we go to the 5,000, you may have enough transactions to go over the 5,000. That should not trigger that threshold. But some platforms may not do it right, or some of the transactions may not be coded correctly. In that case, what happens is in a transfer, to me, that is an error if it's reported on the 1099-K. It should not be. So when we get to reporting, I'm going to say transfers, if they get reported, they're an error. Shared accounts. Well, that's where that, you know, a lot of times I see in college, when I'm dealing with people that have kids in college, mom or dad have the app and the kids are using it. Well, it's a shared account. Well, when that increases the chance of going over the threshold, but each person is going to have to keep track of what their profit is on those transactions. So again, a shared account, we're probably want to look at over the next year or so is to get separate accounts. So I'm giving those things to prepare for when the threshold keeps falling. Worry about shared accounts. Transfers, make sure your app is set up correctly. Now, you've got a transaction, and if it's a personal item, the only thing you get to deduct is your cost of the purchase plus the following items. So, you know, you can adjust your gain or loss on personal items by your selling expense. By your selling expenses. But if you buy something today and you sell it 2 years from now, you got to keep track of this stuff or you can't deduct the selling expenses. So let's now look at what do we do in this roadmap? What do we do if we have an error? So I'm showing you how to do your return if you don't have an advisor, but maybe tax pros are watching this, so they'll be watching it too, and I hope so. So first thing is, what happens if we receive an error? And again, as we go through this, remember, this is if you get a 1099-K in error, because we got the national threshold. But at the beginning of the session, I told you about different states that have $600 and no transaction thresholds. Here in Missouri, it's $1,200 and no threshold. So we still should be getting 1099-Ks in a lot of states unless the states change their requirements. That's why I'm concerned there's going to be a whole bunch of people this year get 1099-Ks, and they're going, why did I get this? I'm below the threshold. We don't know that answer yet. So anyway, so let's look at an error. You received this transaction and it's for some concert tickets. So it was a reimbursement, as we can see here. It was a reimbursement of a friend of $800 for a concert ticket that he bought. Well, it wasn't a purchase, it was just a reimbursement. And you'll see this a lot like on Venmo. There was a reimbursement for going to dinner together, a very common one. You buy the tickets, I'll reimburse you. In that case, if you get a 1099-K in error on this transaction, here's how you report it. You first put it on Schedule 1, and then you put on the line 1099-K received in error, $800. Then you go down to Adjustments for Income, and you report it on 1099-K received in error. At that point in time, the income and the adjustment offset each other, resulting in zero. So that's how we're going to report any errors. That could be, again, a joint account where two people are sharing an account. Well, the person is going to go in for the person, you know, mom, Cynthia, she has a PayPal account. Her daughter, going through college and through law school, they shared. So her daughter used her PayPal account, and when Cynthia would buy her stuff and then give it to her, then the daughter would resell it, and many times she would make a profit on it. Well, each time she would brag about, I made some money on this, that would be reported. But that would be reported on her daughter's 1040, not on her 1040. That's a shared account. So the amount that would go to the daughter, we would treat as an error and say this error that goes over to the daughter's account. Or you'd say a nominee transfer back to the daughter. But the important thing, you have to match these 1099Ks. And I think here's a good stop. As we go forward over the next 2 or 3 years implementing, phasing in this 1099K rule, remember, if you do get a 1099K, don't throw it away. If you throw it away, you're going to get what we call a CP 2000 notice, and they're going to send you a tax bill on the full amount, on the gross of the 1099K. So you see a 1099K, and let's say for a moment it's totally in error. This is how you're going to report it, right here. Any transactions on that 1099K that were transfers that should have not been reported, you're going to report it right here. So to me, this is the biggest thing about incorrect 1099s when we receive it. So keep that in mind. Let's next look at personal. I said in this video, I was going to focus on the errors and the personal transactions, because over in the business world, what happens is in the business world, they're already receiving 1099Ks already. So let's take the next one I want to look at. Here's a personal item sold at a loss. So what's going to happen? We're going to put it on Form 1040, Schedule 1. You received $600 for selling the couch, that good old couch. The couch cost $1,000. So we've got $600 we received for it, but we paid $1,000. It's a personal item. It's out of the living room. There's 2 ways to report this, and I'm going to show you each. First one is, and again, it's sold at a loss. We've sold it at a loss. What we're going to see here, we're going to report it just like we did the error. The first way is we're just going to go to Schedule 1. Then we're going to come down here. And what we're going to do is 1099K, personal item sold at a loss, $600. Then on the adjustments to income, we're going to go on that schedule. And we're going to go 1099K, personal item sold at a loss, $600. The 600 offsets the 600. But remember, we paid $1,000 for it. So what I'm going to do is I'm going to do a second way of reporting it. So here's what we could do is we, instead of reporting it as additional income and adjustments, we can go on the 8949 and it'll end up on the Schedule D. And all this is saying is there's that couch. The proceeds were $600. The cost was $1,000. It's a loss, but it's a personal loss, so we don't get that loss, and we end up with 0. What I like about this, first thing is, it shows me my actual information. It shows me I paid $1,000 for that, but because it's personal, I don't get that. Now, hang on with me for a second, because let's look at a gain, but when we get done with the gain, we're going to look at, these are personal transactions. We're going to have some at a profit, some at a loss. Again, some at a profit and some at a loss. So now let's look if we sold it at a gain. So here we're going to sell this at a gain. So we sold the couch for $1,200 instead of $600. In that case, because it's a gain, here's and I'm going to stop and give a little tax advice in general. See, if you have a gain, then we're going to say it's personal. It's a capital gain. I want to pay the less tax I can. If it's a capital gain, then it's either short-term or long-term. And the ideal thing is to have long-term capital gains. Because if I put it over like I did the loss, or I put it over like I did the error, I'm going to get the highest tax bracket on the gain. So I'm putting it here to get the lowest tax impact. So in this case, my proceeds, I got $1,200 out of it. Cost was $1,000, and I made a profit. So I've reported it. So the next thing we need to look at in the personal item is we need to look at what happens if we have gains and losses in the same year. Now, it could be gains and losses that some of the transactions are on a 1099K and some of them are not on the 1099K. As I said in the beginning of this video, you have to realize what the law says is that anytime you have a gain on a personal item, you still have to report it on the return. And so, and as I've said a couple different times in this video, that's why Congress passed the act for this new threshold. And when you look at it, what they're trying to do is go after cash transactions or the personal transfers on these platforms. They want them reported on the return. Real quick, before we go to profits and losses, if you have no receipts for the personal items, then an examiner may allow you to present reconstructed records, or the examiner may accept an oral testimony. So there's no free pass. You just can't say, well, I can't find the cost. Or you can't say, well, I sold the couch for $1,200. I think I had $1,200. You can't do that. You have to go back and say, I paid $1,000 for the couch. If I sold at 600, I have a loss. If I sell at 1200, I have a profit. So just a real quick stop. Here's the thing I really want to focus on, and this is the confusing part, and this one applies today. This applies anytime you're selling personal transactions, whether you're selling it for cash or somebody's writing you a check, or you're using one of these platforms that are a transfer, Venmo, Marketplace, PayPal, whatever. So what I want to do in this example, we're going to sell something at a profit and sell it at a loss and show you how to put it on a return. Because the end game of this, once they start issuing 1099Ks at a lower threshold, or you end up getting a 1099K because in your state you're required to have that lower threshold. And I think that's what people are getting. We don't know what the states are going to do that's already dropped their threshold to 600 and dropped their threshold to 1,000 or dropped their threshold to 1,200. I don't know whether they're going to say we want that anyway. There may not be time to change the law. I don't know. So let's look at activities when you have a gain or loss. And this slide is probably the most critical slide in reporting personal activity, personal sales on a tax return. Your gains and losses are to be reported separately. And that means both. Gains on the sale of personal assets cannot be offset by losses from the sale of personal assets. Let me repeat that. If we had two couches and one we sold for profit and one we sold for a loss, let's say we had a couch and a love seat, one for profit, one for a loss. We can't put them together and offset them. So what happens there is that you're going to have to report them separately. So let's take a look at reporting them separately. All right, sold 2 sets of 4 tickets, bought for personal use. Two separate sporting events. So there are 2 separate sporting events. One set sold for 800 and the other sold for 200. Purchased each set for 250 or total for 5. So here's where we go. Sold 1 set of tickets for 800. Well, we're going to put them on the 89.49, and there because we have a gain. So here's our 800. We sold them for. We have sold cost 250. Our gain is 550. So important thing, we're going to put it there. It's short term, so it's short-term capital gain. If it was over a year, it'd be long-term capital gain. So we sold 1 set for 800. Sold set 2 for 200, and in that case we sold it. We have 2 ways because we have a loss here. We can sell it at 200 and show item sold at a loss and offset the same thing, item sold at a loss of 200. So as you can see there, it's zeroed out. But we have 2 transactions. So what that means is we reported one over on the 89.49 for capital gain, and we reported the other one on ordinary income. Is there a way we don't have to fill out all these forms? Keep it simple. Well, yes, we can. So what we can do here is if we have gains and losses, what we can end up doing is that we can end up in each one of these cases, we can show that here was the one for a gain, and here's the one for a loss. But notice, the loss is over in the adjustment amount. So here's the loss, gets suspended, so to speak, right here. So you can show the client, here's what we had for income. Here's what we had. We had a profit on the first set of tickets. We had a loss on the next one. And so in this way, when you get done, see this area here of gross proceeds? The area of gross proceeds, that will tie back, or should tie back to your 1099K, or if you have other transactions that's not part of a 1099K, this number should always be greater than the 1099Ks. So what we've kind of done here is we've looked at the main part of a new world to a lot of people. It's to that person that gets a W-2, maybe that's the only thing they have, or they're, husband and wife with a couple of kids, but they've never filed, they've never received a 1099K that they've had to file on. And maybe they think these personal transactions, you don't have to worry about it. And so don't shoot the messenger here. It's just the way the law is written and has been written since the beginning of the law back in the 50s. It's the fact that if you have a gain on a personal item, you're to report it. There's no de minimis threshold. If you have a loss, you don't have to report it. And if you're reporting with no 1099-K, the losses are not critical. Just report the gains if you want to, because losses don't have to be reported. The reason why here we're reporting the losses is in case we get a 1099-K. And there, because of that, we want to report the gains and the losses, because if B here is less than the 1099-K, you're going to get a notice and the IRS is going to you to pay taxes on the difference. So I just want to step back for a moment and kind of recap what we've done today. First, they've moved the threshold from the $600 and no transactions. They moved it to $20,000 for this year. Then it's going to become in the future $5,000, and what appears to be in a couple of years, it will end up being the $600. Many states have already reduced their threshold, so we don't know what the states are going to do. So go online, check with your state to see what your threshold is. The other thing is that some of these platforms, we don't know if they're all going to not issue 1099s. They may pull the plug, and I would say pull the plug. They're just not going to report. But I don't know what they're going to do when several states again have reporting requirements. Are they just going to carte blanche, put it all out to everybody so we get used to it? Are they only going to do it for those states? You know, we don't know. That decision has to be made by the states. So independent of whether you get a 1099-K or not, you're still supposed to report any personal item with a profit. Now, the other thing we covered here, so we covered the personal items. Personal gains, you have to report. You cannot offset them with personal losses. If you get no 1099-K, all you have to do is, it's still a requirement. You are to report all transactions that you have a gain on that are personal transactions. I'm trying to say here, you can report the personal items either two ways, but I like the one way here. I like this 8949 methodology because it shows me a list of every transaction. So when I start getting my 1099-K, I'm already used to tracking the documentation of basis. We got to know how much it costs. And so with this in the air, I showed you how to put it on and off, offset it. And so with that, I think that's kind of a summary of today for the 1099-K presentation. But I think more importantly, this is a presentation of how to report errors from 1099-Ks, but most importantly for this year and probably next is how to report transactions on personal sales that you use on a platform like Venmo or SD or Etsy, PayPal, etc. So it's something we need to be practicing now, and I hope this video helps, and I'll see you on the next one.